The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the April 29th marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and folks, I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential is something we must master each and every day. And as I said, I am grateful that you've turned into what I like to call the Gratitude Channel. The coolest thing about gratitude is that it is an energy multiplier. If you're looking for some energy, folks, this is the right place to be. Gratitude is the most powerful tool that each of us have acquired. We were born with it. Each day, you should begin by tuning into your own gratitude frequency. You can do it by writing down 2 or 3 things each day. I mean, each day you should be writing down 2 or 3 things that you are grateful for, or 2 or 3 things that you could be or should be grateful for. Take advantage of these tools that we've got today. Take advantage of your memo pad inside your phones out there, your pad devices, maybe just that memo pad that's sitting there on the side of your desk. Write down 2 or 3 things that you're grateful for. What's great about it is once you have that list together, you know, the way that the universe works, it's just testing you. That's all that it's supposed to do. It's the way that it works. It's the difference between feminine and masculine energy out there. Feminine energy always testing masculine energy. It's the way the universe works, and when you get thrown that curveball, it makes it so much easier when you can go back to that gratitude list out there. Always, folks, give thanks to the areas of your life that may be challenging you right now. You know, for those areas, they're just simply unanswered questions that you will one day answer. And when answered, guess what? You'll be grateful for the solution, and you'll add that to your gratitude list as well. This is TFNN, and this is the Gratitude Station. Let's go take a look at the markets out here. The bulls are happy, I should say. They're grateful because you've got the Dow trading up 54 points right now, out at 14,765. S&P trading up about 8, out at 1590. You've got the composite up 24 points, trading out at 3303. Russell 2000 is the leader in the clubhouse, up 6.8 points, trading out at 942.07. Google's up $11 and change. Apple's up $8. Microsoft up 63 cents. That's a 2% move inside Microsoft. Intel up 17 ticks. That's up 0.7%. Cisco pretty much flat, trading down 3 pennies. Bib just behind Google, up $9.47. Apple at 8. Metadata Solutions, MDSO, up 750. Cedicorp up 750. Moody's Corp up 6. Conceptus Inc. being bought out by Bayer, up $5. Actavis, A-C-T-A-V-I-S, Actavis, A-C-T, it's up $4. Tenet Healthcare up $3.60. PVH Corp up $3. Tellular Corp up about $3. Valiant Pharmaceutical up $2.70. McGraw-Hill up $2.60. LifePoint Hospitals up $2.65. If we take a look at the downside, well, you've got the direction share, the short on gold. That's the leader, down 336. But beyond that, you got Namtech Electronics, very much a stock that is struggling this morning, off 33%. Roper Industries, not too far behind them, down $2.13. Greenway Medical off $2. Amazon off $1.94. Expedia down $1.73. Netflix off $1.80. Shang-Yu CYOU off $1.32. Eastman Chemical off the same. Las Vegas Sands down $1.21. Our call-in number, as always, is 877-927-6648. Let's go take a look at the S&P 500. Right now, trading at 1590.20. That is trading inside the swing point here from April the 11th. That's the swing point high, folks. That number, 1597.35, looks like that is the destination. Should be able to hit it today or tomorrow. 1597.35. So far, interest session, you've been up as high as 1590.46 out there. That is Let's go take a look at the SPY. Let's take a look at the correlation of the SPY. The SPY here up at that swing point on April 11th has 110 million shares. That's to the upside. Of course, we know 2 trading sessions later was 216 million to the downside, led by April 17th with 226 million to the downside. On the trading session of Thursday, you were up with 130 million, but that 130 million going into 110 million from April the 11th. That was coming into that swing point with volume on Friday, just really a sideways day. If anything, just quite frankly, testing the downdraft from April the 15th, closing back above that high on the SPYs, which was 158.13. Friday's close on the SPY was 158.25. Volume so far this morning, 14 million shares in 45 minutes of trading, we'll call it. So what? Maybe that's about 66, about 70, about 80 million shares. Lighter volume right now than the 110 million shares on April the 11th. So bullish side, SPYs get up to 159.71, close back below it on less than 110 million shares. That says be careful out here. We are coming into that 6-month seasonal sell in May. Let's go take a look at the other indexes out here. Let's take a look at the Dow, and then we'll go take a look at the diamonds. We've got the Dow trading up at 14,763. Of course, the Dow making that very nice hammer candle down here at the bottom. That was on April the 19th out here. Right now, the Dow is just trying to struggle to get up into that swing point low from April the 11th. Remember, the S&P is already inside it. April the 11th, 14,785.36 is the swing point low. 14,792 is the 0.786 retracement move. It's trading at 14,766. It really should have no problem getting up into that April 11th swing point. The problem is going to be as it approaches the area of 14,865.06. That is April the 15th. Big downdraft there. The Dow has got big problems out there. I think it's 6 or 7 of the equities that have volume off of its highs out there. That is absolutely not a good thing. Let's go take a look at the Dow Diamonds ETF out here. Let's go see what we've got going on volume-wise here. DIA is the ticker symbol, trading out right now at 147.36. It, too, trying to get at least to the top of the April 15th candle at 147.93. 14 million shares is that downdraft. On Friday, you were up with 3.2 million shares. If we take a look at yesterday or today's trading session, only 693,000 shares in 45 minutes of trading, and nowhere near the volume that we saw to the downside. So you're just seeing nothing more than really the B to a C of an A to B equals CD down at this point inside the Dow Diamonds. Let's go back over here. Let's go take a look at the Russell 2000. Then we'll take a look at the IWM. As we take a look at the Russell, it is trading at 941.80. The Russell 2000 is now up and over the big downdraft out here from April the 15th. What the Russell 2000 is attempting to do is to get into the swing point. It's not its swing point high, but it's getting to its most recent swing point, the same one that the S&P and Dow are trying to make their move to, which was April the 11th. The low out there, 944.81. Right now you're trading 941.78. You're trading right now in the 0.786 range out here. We know that the Russell 2000 has struggled to the downside. Let's go check in on the IWM. Let's go see what the IWM is doing. Do the benchmarks on volume is there as well. So we can see the trading session of April 11th inside the IWM is 32 million shares. The first time up there was on Thursday with 36 million shares. Okay, you're moving into a swing point with volume. Yeah, it's up over the downdraft that's got 100, well, we'll call it about 101 million shares to the downside on April the 15th. And so you've got big volume to the downside and light volume to the upside here. So far today, the high has been 93.73. That means that it has almost tagged the 93.75 number of the swing point low from April the 11th. Volume so far in 45 minutes of trading, 6.3 million shares. Volume inside the IWM is pretty decent out here as it approaches that 32 million number from April the 11th. Let's finish this off by taking a look at the Qs. Right now, the Qs here are trading into an area that has been a formidable resistance level that was established by the downdraft between September 21st and September 24th. The swing point, though, on September 21st has only 23 million shares. The first time up there was with 55 million shares on April the 10th. You also tagged that area with 37 million shares on April the 11th. We tested that on Thursday with 26 million shares. It was losing its energy. So far today, good volume, 5 million shares in 45 minutes of trading at 5 million shares right now. Yeah, it's pretty good considering you're going into 23 million. We'll see if this horizontal resistance holds again today. The number you'd be looking at is $70.08 out here. The NASDAQ, the Qs, the NDX 100 is something that we must be paying attention to because it has been a weak link out here, and you do have that failed .786 Gertley. And what we have right now is we've made that 100%, not we, but the equity has made that 100% move of a move. And the thing you got to be careful about is that if it can take out the level of 70.58 from September 19th out there, do it with more than 36 million shares, this would be setting up that butterfly pattern, either 1.272 or a 1.618 butterfly out there. So here is one of the charts that you want to be paying attention to, and that is the Qs. Let's go to Gail, just down the street in Tampa. Gail, thanks for calling. Thanks for holding. How are you this morning?
Good morning. How are you?
I am doing excellent. Thank you so much for asking.
I just wanted to ask a question about Coach. I've never shorted that before, and it just looked like it would be a nice setup, but I just wanted to get your take on the chart because ever since the news came out that they had a pretty good quarter, I know in past they have not done so well, and it doesn't look like it's really going up with a lot of great volume. So I wanted to see what you thought about when an entry point might be for short on this.
Okay, so let's take a look at Coach. The ticker symbol out there, folks, if you're following along with Gail and I, is COH. And if we take a look at Coach, one of the things that Gail is looking at and that you should be looking at as well is this big downdraft that it had here, and that is on January 23rd. Moves down with 50 million shares. Now, you are inside the gap right now, Gail, and that gap obviously was started from the downdraft session of January 22nd, and that low out there is 59.86. So inside Coach here right now, what I would say is you need to wait until it at least gets up into that where it broke down, 59.86. Now, what you would want to see take place there is ideally you'd like to see it come in with less than 6 million shares. Now, if we take a look at the last few trading sessions, you had 5.6 million shares on Thursday, Friday 3.5 million shares. So far today, almost 1 million shares. Let's say it's going to do 1 million shares in the first hour. That's the equivalent if it could maintain this volume of 6 million shares. So it would be coming into that level with similar volume. Of course, we're benchmarking that downdraft, but here's how you could play Coach. So let me pull this back a little bit further as well because this has got a couple of nice downdraft sessions here. Gail, can I ask you to stay on through the break here?
Sure.
Absolutely. We're going to go back to Gail. We're taking a look at Coach. The ticker symbol is COH. Right now, we've got the Dow up 54, S&P's up 8. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow's up 63 points right now. S&P is up 9. Composites up 28. And we're on the line with Gail from Tampa. We're taking a look at Coach. COH is the ticker symbol. She's got an interest in taking a look at possibly shorting this equity. And what we've got up on the screen here right now, Gail, first is the daily chart. And on the daily chart here, what we can clearly see are two large downdrafts. And we can also see that really what Coach is doing is traveling in a sideways consolidation range. We could say that really it's been doing that since about the early June of 2012 timeframe. So just about a year out here. Now, on the bottom of my chart, not the very bottom, the second level of the bottom, we'll call it, I've got that relative strength, relative weakness indicator. It's a great tool to be used to identify whether stocks are either in overbought or oversold territories. This one here is truly in the overbought territory. We can see it hasn't been on the daily chart. It has not been up at this level really since about the time frame of February the 13th. So that means it's a good time to be paying attention to what the actual equity is doing price-wise. What I also see here is I see that last week as the stock gapped up, this must have come out with earnings, I'm imagining, on April 23rd. Maybe it was after the bell on the 22nd, Gail? Do you think?
Yes, that's correct. That's correct.
Yeah. And so after earnings, it went ahead and gapped up, and when it did that, it got into most certainly the most recent gap down here. And I also see that the I've got the moving averages, so I've got a lagging indicator out here. Still good to pay attention to from a momentum standpoint, and the 20-day is now over the 50-day. That's intermediate term bullish. An intermediate term, I'd say, really, from a weekly chart perspective. So I think that what you ought to take a look at is your first signs out here are going to be in the $60-ish range out here. I think that this equity, it should close. You got decent volume here today, and watch what happens when it gets to 59.86. And if it gets into that 59.86 to 61.60 level with more than 6 million shares, it probably wants to just trade up into about $62 out there. And what I would do is I would wait for some type of bearish candle to form out here. With earnings being out, I'm going to assume that these downdraft days that we're looking at, July 31st and the session of January 23rd, that those also were earnings release dates or something with regard to earnings that might have been out there. And so as this makes its way up here, it shouldn't just fall out of bed. And what you want to do is you'd like to wait for some type of bearish candle signal to then take a look at possibly trading this thing to the downside. And the bearish candle could be a bearish engulfing, could be an evening star. That's what we had right here, back here. If you take a look at this 3-candle session, January 17th, 18th, and the 23rd out here, that's actually an evening star candle formation, so that was your bearish candle signal. If we go back a little bit further here to the left-hand side of the chart, we've got a nice bearish engulfing candle on September the 18th. So you don't have to sell the top tick, nor do you have to buy the bottom tick. Instead, I say it's better to just really draft what the market is doing, and the candle signals will give that to you. If we look at the weekly chart out here, it more clearly defines the trading range, the sideways consolidation area. And another reason to maybe be a little bit concerned and let this thing play out towards the top of the consolidation area is last week's volume. Clearly, the downdraft that we saw the week of January 25th, 82 million shares to the downside. But if you take a look at this, as price has been moving up, if we take a look at it coming off on the weekly chart here, really from the time period of March 29th through last week, we can see that volume is increasing as the equity is moving to the upside here. And so this says to me that really you got to let it get into around that 62-ish type range here. The weekly chart has all kinds of bears camped out on this equity. And if we take a look at that weekly chart, you've got this candle right here, big bear sash candle the week of January 25th. The same, you've got this evening star. Here's a weekly evening star. So this has formidable resistance up inside this 63-ish level. If you go short this equity at whatever price point, and you get a close above $63.24, what this actually would be signaling to you is you've got a trading range here. We're going to call it from 62 to 48. So 48, 58, that's about $14 out there, I guess, is my math. My math could be off. And if it breaks above this 63.24, that says it wants to go up to about $77 out here. It says it wants to go back and revisit its highs. So nothing wrong if the trade doesn't work out and you go short and it closes above that area. Nothing wrong with reversing and going to the upside. All right?
Right. Okay, thanks so much. That sounds great.
Hey, my pleasure. Thanks so much for listening. Thanks so much for calling. You too can get in on the action, folks. Just give us a call at 877-927-6648. My apologies. I'll be back in just a minute.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow is up 63 points right now. S&P is up 8. And had a request in the Dan to go back and take a look at the Bradley model chart. Now, if you're just joining us or you're joining us for the second hour, I did take a look at this right off the bat here this morning on the 9 o'clock hour. And Donald Bradley, back in 1946, I believe it was, in a book that was titled Stock Market Prediction, created what's referred to as the Bradley stock market model. Now, the science behind the book was the premise that planetary pairs such as Venus and Uranus would have a positive or a negative bias in the market. And what he did was he assigned point levels to those biases, and he was able to produce a graph to give a prediction for what the stock market would do in future years. I mean, this model here goes out as long as you want. And he composed a matrix as well of all the planets on an X and a Y axes, and when they were at conjunction, it gave you certain numbers. So it just, and the reason why he was using Venus and Venus and Uranus is because I believe it's every 255 days is when you have a full cycle of Venus going around Uranus. And if you just simply take 255 divided by 365, guess what number you're going to get? Yeah, exactly. 0.618 out there. Now, the Bradley model, very much like Jack Sparrow in what's that movie out there? Geez, there's a brain contusion. Well, let me just go back and say the Bradley model is best used as a guideline, folks. For trend analysis. So when you take a look at these lines out here, remember, don't be paying attention to this is not predicting a price point that something is going to move to. Instead, it's really being used as a guideline for trend analysis when, in fact, it works out here. Now, what I like to do with regard to anything that I overlay on a stock chart is try to find the correlations, because there are times when things will correlate. There are times when a lunar strategy, for whatever reason, seems to correlate to the market, and when it does, you use that as a tool. When it doesn't, you just kind of park it on the side, you pay attention to it, and you wait to see when correlations come back. Well, what I've done here on the Bradley model, this is overlaid on the Dow here, was I tried to identify the most number of correlations. And what I noticed was certainly at lows out here, I was able to find, quite frankly, a number of correlations when I went ahead and I backed the model up to the left. So I backed it up. So in essence, here, and I can go ahead and I can show you what it looks like if I go ahead and pull it all the way forward. So I backed it all the way up 3 weeks, basically about 22 trading sessions out there. When I did that, what I noticed was, and I'll just come back here, if we come take a look at lows back in July, around July 12, 2010, the Bradley model was making a low, and so was the stock market. The Bradley model was making a high, by the way, in August 5th, maybe, of 2010. So was the market. The Bradley model was making a low August 27th of 2010. So was the market out here. I don't really see the correlation so much. I can see a correlation here where the Bradley model around November 16, 2010, it was making a low, and so was the stock market. So I see that correlation out here. This one that coming in around January 13th, not so much. I can see this correlation. You can see the Bradley model here was suggesting that a low was going to come in right around March 15, 2011 before it moved to the upside. So you can see these correlations are out here. I just have highlighted a number of them for you. If we take a look at back during the August of 2011 time frame, we had some real sideways choppy consolidation, markets and important lows being put in. The Bradley model was making a low right around the days of August the 22nd. Market did as well. The Bradley model making lows around September 23rd. Market did as well. Bradley model's making a low around November 25th. Bradley model did as well. Bradley Dow did as well. The Dow making lows around March the 7th, 2012. Bradley did as well. Now, again, that's with me shifting so that I could find where I could find correlations out in the marketplace. And it's always good to know. Well, if you take a look at the lows coming in here in November of 2012, Bradley model was also making a low. If you take a look at the lows being generated around December of 2012, the Bradley was also making a low out here. So what does this say? It says if the high were to work, I've noticed that lows seem to be working better than highs out here. But if we just take a look at the high coming in, take a look at what day does that come into, it's really right around the 7th, 8th of May out here. Maybe May 10th, somewhere in there. Remember, this is used as a guideline, not an exactness. And it was Pirates of the Caribbean. Thank you, Rob, that said use this as a guideline out here. Now, if the Bradley model were to work, what we could actually see out here is this is telling us that forget about just the sell in May. This is saying this cycle would actually work out all the way from sell in May through that next 6-month seasonal cycle when you would come in at the end of October out there. So this is all based on planetary alignments and values that are given, and you can just simply go out in the future, and that's just simply what the Bradley model tells us. We can go pay attention to stock charts, and we can go say, well, what are the stock charts telling us? Forget about that Bradley model out here. Well, you go take a look at stock charts, and you go take a look at things like 3M. You know what? Let's go ahead and pull up 3M out here. MMM. I like M&Ms. We take a look at 3M. What do we have here? We've got volume off of the highs, volume off of the top. Not a positive signal. In fact, very bearish out here. So you got 3M moving a little bit lower here this morning. So you got volume off of the highs out here. We could go take a look at IBM has got volume off of the highs. ExxonMobil's got volume off of the highs. I mean, they're just all littered across the landscape out here. So that is if you take a look at this, the most solid ETF that was out there. Let's go into the actual spiders themselves here, and let's take a look at it. And when I say solid, the one with the largest move, well, one of the largest moves out here would be the consumer staples sector. And the consumer staples sector was just simply screaming on April the 24th out there, 30 million shares to the downside. Now, it was giving us some signals beforehand as well that it was starting to get a little bit toppy out here. But to the downside with 30 million shares on April 24th. And what we're seeing here inside the XLP, and we're taking a look at a daily chart. For those of you that have listened in on the show, what you know when you start to see some small-bodied candles out here, what you're really paying attention to, most candle signals are reversal signals. There is a continuation pattern called the rising three or the falling three candle session out here. And if we take a look at this, you start to see small-bodied candles like this. The continuation pattern, if the XLP closes below the close of April 24th, that's $40.77. You'll have a continuation pattern. Where will it continue down to? Always go to the most logical spot. The most logical spot of where a magnet is going to be a swing point, your next swing point low. Well, inside the XLP, it's not that much further down. I mean, it's at 39.52. It would, again, have to close below 40.77 out there. But the XLP, the consumer staples, is starting to give things up. If we go take a look at some other strength inside the S&P out here, we'll take a look at the XLF. Let's go see what the XLF is doing. You know, right now, the S&P itself is up about 9 points, trading at 1590. Well, on the trading session of April 25th, you had the financials make a high with 36 million. That was after making a high with 48 million on April the 11th. Something to think about. And then to the downside with only 23 million shares, so not too bad on Friday's session. So far today, in an hour and 12 minutes of trading, you're up with 6.9 million, going into 36 million. So volume today not too shabby out here. We know that we saw the move down into the most recent breakout area inside the XLF. That was coming off of the March 4th to March 5th level. That was 66 million shares. The XLF came back and tested with 59 million on April 5th. Tested it with 61 million shares on April 18th. That makes you say, something to think about. You're making highs with 36. You're making lows with 61. You're making highs with 48. You're making lows with 59. So the XLF is also saying, be careful out there. Be careful out there. If we go take a look at the technology sector. Technology sector here this morning doing well. You've got Google up, Apple up, Microsoft up. Intel is up, all of them up 2 or 1% out here. So you got the tech sector. Now, all that the tech sector is doing, the XLK, is just running into this 0.786 Gartley sell pattern. If you were tuning in on the early part of the show, we were looking at the Qs, and the Qs broke the 0.786 Gartley sell pattern. But the technology sector, the overall technology sector with inside the S&P 500, has not. What we do know about the technology sector, very, very good support down here off of the gap up from January the 2nd, December 31st to January 2nd. That's this black horizontal line going across my screen. The last time that was tested was back on April the 19th, and there was 8.6 million shares to the downside going against 15 million shares. No way was that going to break it down. Even coming back on a large downdraft session from February 25th, only 8 million shares. Again, 8 million shares going against 15. Not a chance. Now, the 0.786 Gartley sell pattern occurred or was formed on April the 10th out there. 10.5 million shares. You're trading inside that bar here today. You're doing it, or it's doing it with 1.3 million shares. And actually, that's not enough volume. That's not enough volume necessarily to try to take out that swing point that's got 10 million shares as those highs were being made. So we're coming into selling May. I can't tell you whether it's May 1st, 2nd, 3rd, 4th, 5th, 6th, 7th, 8th. You're just coming into a seasonal cycle that has worked pretty darn good. Not just pretty darn good, really good out here. You got a Bradley model for those of you that want to make trading decisions, trend decisions off of the Bradley model. So you got a number of things coming into play. And look, when they fail, the beautiful thing about these patterns, when they fail miserably. So you got a great opportunity here to either just prepare yourself for a little hurricane. Oh, that's right. We got the hurricane pattern inside the Dow. If we go take a look at the, let me see here. Somebody said XLV, Steve. So if we take a look at the XLV here for a moment, and we take a look at that is the healthcare sector. Now, inside the healthcare sector, if we did have some volume here off of its highs. Well, we've had it a couple of times, 3 times out there. So thank you, MMS. We had 10 million shares down on April the 15th, back up with 10 million shares. So that wasn't too bad. That 10 million downdraft on April 15th we're talking about is compared to the move up on April 23rd with 10 million shares. Then we have 12 million shares. No, so not like the XLP itself where we saw significant volume to the downside, but this certainly is a stretched market out here. Very much a stretched market, and that is the healthcare sector inside the S&P. Weighting wise, I don't recall what the XLV is. It's not a heavy weighting inside the structure of the S&P 500. I did mention that hurricane pattern inside the Dow. So let's go take a look at the Dow, because the Dow here certainly giving all types of sell signals. As we take a look at that hurricane pattern here, and we take a look at the Dow and what it is doing. So right now it's trading at 14,778, making its way into that April 15th downdraft day. But this 4-candle session here, let me just erase a few things, make it a little bit easier for you to view on the screen here if you're watching us on Tiger TV. It's this session right here, which is April 10th, April 11th, April the 12th, and April the 13th. That 4-candle evening star formation pattern, what I like to refer to as the hurricane pattern here. Same pattern that, quite frankly, was made down here in November. It's made at the highs. It's made at the lows out here. You break above this. You break above the high of April 11th inside the Dow, and then that hurricane pattern just simply failed. And what would that say? It would say you've got one heck of a continuation move underway. But I don't think so. I don't think so. You got too many bearish signs out here, and sell in May. I think we're going to have some fun with a market. And it's going to be a market that's not going to go straight down. I don't think it'll go straight down. Bulls have been rewarded by buying the market up, so those will provide other great selling opportunities. So do you have to get in on the first move? No, you don't really have to get in on the first move. You can just sit there and watch. But just be careful. Just use stops, whatever it is, percentage stops on a close. Just use stops, put it down on paper, and then trade it. Whatever it was, whether it's the amount of pain you're willing to take it, and then be done with it, and go take a look at the next trade out there. That's what this game is really all about. Let's take a look at some of these stocks out here that are moving and grooving. We've got all kinds of stocks. It is earnings season out here. Let's take a look at something we haven't not looked at here today. Let's go take a look at DHI, the housing sector. Had some nice positive news come into the marketplace. I think it was like around 9:30, 10 o'clock. DHI up with some nice volume, gapping up nicely on Friday. 15 million shares. You're having some additional follow through today. A little bit lighter volume, 2.9 million shares. Let's pull this back here. Let's actually put this on a weekly chart, see what this is doing. So this is made your 1 to 1.618, A to B equals CD. You're trading inside the, you're trying to get into the swing points out here all the way back from February of 2007. I suspect that is where it wants to trade to. The low is 27.74 out there, so that looks like that area has been no, it has not been tagged. So, and if it can close inside 27.70, that's the low of February 20th, it can make a run to 31.13 out there. That also is the 0.6. Well, the 0.618 retracement is 27.91. 877-927-6648. Right now, we've got Goldilocks up $16, silver up 55 cents. We'll be right back.
Are you looking for a precision edge in the market, something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 75 points. It's up about 0.5% right now. The S&P up 0.6%, up $10, 979 to be exact. Trading at 1592. Composite up 29 full points. That's up 0.9%. Russell 2000 up 0.7%. That's trading out at 941. 89. If we take a look at the XAU, I've got the weekly chart of the XAU up on my screen out here. If we take a look at last week's move, that candle session, nothing more than no reversal pattern, just a harami. We know that what we were looking at here on the weekly chart, very, very oversold, has to work its way off. It formed a 0.786 Gartley buy pattern. That it most certainly did on the weekly chart out here, but I don't see that just yet as a buy pattern. If we go take a look at the daily chart out here, the daily chart, you can see just working its way off inside. When I say working its way off, the oversold condition out here inside the XAU. If you start going and taking a look at some of the equities contained inside the XAU, nothing looks that great here just yet. I think it's going to be a great buying opportunity, but you want to go see these lows at least tested again. Maybe even a little bit more of a push lower out there before you start stepping into those trades. If we go take a look at a couple of stocks here, or to the downside, we're taking a look at NAM Thai Electronics. It is now down 36%. That's off over $4 this morning, and with big volume. So far, volume out of this, 3.7 million shares. This thing had a nice breakout with 7.5 million shares, but we've only been trading for an hour and 25 minutes. It's coming back into the area where it first broke out, and it's doing it with heat. So this thing has got lower to go. This is going to run all the way down, at least on the daily chart, probably all the way down into the low mid-sixes out here around 650. It's got some room to go to the downside. That's on NAM Thai Electronics. Let's take a look at Google and Apple. Google is the leader in the clubhouse. Google's up $15 and change, almost 2% this morning. So let's go see what Google is actually doing out here. Give me a moment. Here we go. So we've got Google. Google here, coming out with earnings, having a nice move with some good volume on April the 19th, 5.8 million shares. Right now, what Google is trying to do on the daily chart is take out a recent swing point high from April the 24th out there. That level is 818, even Steven out there, only 1.8 million shares so far today in trading, 849,000 shares. So it should have enough time in the day to have the volume to take out that high of 818. If it does that, then you can see Google move all the way back up to the, you can see it's got volume up at the highs here on March the 5th, 828.90 to the 840 level. Could actually be setting up a small A to B equals CD on the way up here. If we take a look at that measurement inside Google, you could actually see Google get up to about 853.65 to 869.24, where it looks like what it would create would be a little butterfly pattern out there. Let's just go draw that in and see if that is the case. Absolutely. So right around the 869 level would be a 1.272 butterfly. That is on Google. Let's go take a look at. There's a number of equities here that are going to be releasing earnings after the bell. You've got Buffalo Wild Wings. We haven't looked at that stock chart in what seems like forever. So let's go look at it. BWLD. Let's go see what this is doing. So trading up towards its session highs, $95.24 here. Let me refresh my screen. Looks like I'm going to run out of time to do it. If we take a look at Buffalo Wild Wings here real quickly, you've got this. If Buffalo Wild Wings does not produce good numbers here, this ought to drop down to about $81.15. Stay tuned for Basil Chapman, folks. It is Marvelous Monday. Have a great Monday. I look forward to seeing you tomorrow morning. Take care, folks.